Today is July 21st, 2026, and here is the S&P 500 for what I was looking for here at first pullback. So going into today, what I was looking for was, see this channel right here, this purple channel line I have. I was looking for price to continue that unless it broke out. So going into today, which is this dashed blue line right here, we can see we had a really nice trend going here, but then it broke it and took up. So once it broke a trend line like that, one thing I like to look for is see if it's going to break it, come back and hit somewhere between the 38 to anywhere the 76.4%, but it didn't. We got a little battle in the overnight session over here, but then once the market opened, they're at 8:30 right there, where they will dip down, fake people out, get them trapped, and then reverse the other way. So that move down is dead and gone. And also one thing that happened there, it hit, you see how it bounced perfectly off of here from the daily extension level using yesterday's highs and lows. Is the 100 to 114.6%, both on the bottom and both on the top right over here. So what today ended up being was just a nice little measured moved up and right there and right here. So went down, hit the 38% perfectly right there. Actually, this low one up here is a little bit higher right there. So it came down, hit right off the 38%, didn't even touch 50%. Went up there, hit right in the target area between the 114.6 and 141.4 area right there. And that was it. And for the movement. So going into tomorrow, we can see we have a really nice trend channel right here. And we'll drop out right there. So you see we hit the top of it now, bouncing off of it. So what I am looking for is using this low right here and that high right here. If price comes back and let me adjust that, price comes back looking to hit around the 38% level at least, and then see if we're going to go up and hit this target area right up here. Let me make it the target. There's a target box. And you'll see here from other videos, the platform I'm using is different right now, the trading platform. I switched over to Quant Tower, and the reason why is I trade through AMP Futures, and AMP Futures offers it free of charge for it. So I've been getting tired of TradingView for a while. It's fine for what it is. Being a web-based system makes it easy, especially if you're trading, have to trade on other computers and things like that. But the biggest thing I didn't like about it is once you start trading multiple contracts, they don't have a multiple exit system on there. So if you're trading 2, 3, 4 contracts, you can only get out at one level. They won't let you get multiple levels, and they say they respond to people who are paid members. Well, I had been a paid member for a long time. I didn't have the highest tier, but I think I had the second highest. I don't remember. It wasn't the lowest paid one. Who's the next one up for? So, not a big whale or anything, but they claim that they respond to people who would ask them questions. They never answer my questions. So that was another reason why I got tired of them. Plus, in my life, I'm trying to get rid of everything that you lease and never own. So that was another thing. You had a lease TradingView. You never owned it. So if you waited till like Black Friday or some of the big sales, you could get it down to, I think, about between $8 and $10 a month, something like that. But if it wasn't, it's about $15 a month. And so, yeah, it doesn't sound like a whole lot. But when you have a free trading platform, it's taking a little bit of learning curve to use it. But overall, it's been really nice. There's some quality of life features that TradingView was just easier, probably just because I was used to it. But I've been able to bind some hotkeys and things like that. And so far, it's been great. Today is my first trading day on it. But anyways, so moving forward, so once today opened, we still have this trend line right up here. And what I was looking for, my initial trade that I look for right here is, you see this colored box right here. This is part of my indicator suite that I created right here. What it does is it tracks the first minute open of the day once the market opens at 8:30 a.m. Central my time. And so what it does is it just draws that box for whatever the 1 minute candle is right there, and then takes it all the way to the session's end for that day. So what I'm trading right now, I've switched down from the 5 minute to a 3 minute chart because another thing that this offers as well, where you have to upgrade it in TradingView is tick charts. So you can also trade off tick charts as you want to. I know a lot of people people like doing that. So I figured out that around the 3 minute, actually it's about 2.5 minute, kind of equals the ES for the 2000 tick charts, which is what a lot of people trade off of. But I like the time. I just preferred that. Been trading that for years. When I first started, it was the tick charts, but I just preferred the time. So I've gone on 5 minute to 3, from the 5 minute to the 3 minute. Because the 3 minute, once the market opens, it is very similar to the 2000 tick, and it gives more movements for some of the other ones I'm trading, which are the Dow and the Russell as well. But anyways, so the first thing I look for once price opens is I look to see how it's reacting off of the 1 minute chart right here. So what I do is I measure the 1 minute open. Let me get the right template on there. 1 minute fib extensions. Oh yeah, I forgot you got to hit apply. It's another thing right there. So we go to the top right there, and we go to the bottom right there. So it came down and hit the 200. Perfect. So it came down right there. So then what I do is after it hits the 200, what I look for is I look for a close above the 21 EMA. So you can see right here is where we had the 21 EMA get closed. Let me throw the, sorry, I'm still looking for all this stuff. Again, patterns, no, other, where's circle? Here we go. So what, where is it? Right here. So right there is when it closed above the 21 EMA. So what I do is I look to go long right there, and then the exit is all the way up here at the 141.4% exit right there. So that one went up, was a very nice trade as this market opened up right there. And then what this does is this is how it determines my direction for the day. Let me talk about one other thing here real quick as well. So another thing that I look for, which didn't happen today, it doesn't happen too often, but it does happen, is if price goes up and hits all the way to 685.5% level up here, then I fade it. I just get in there kind of naked fade, and then just take a good scalp. There isn't like a retracement area that I look for. I just look for a little bit of a scalp back down, because pretty much every time I've seen it that hits a 685%, it means it's extremely either overbought or oversold, and you can fade it for a quick little scalp for it right there. Sometimes you can do it on 323.6. This would have been really nice if it hit there today and this other trade hadn't have happened, which we'll talk about here in a second. But the 685 right there is what I look for it. So once that happens, so initially when the 1 minute opens, whichever way it's going, that's the direction we're looking to take the trading for the day. And so since it initially started down, let me take this off right here. Since it initially started down, we look for where the previous high was. There was the previous high. Actually, the previous high was right there. Sorry about that. Real close to it. Previous high was right there. So we start looking for trades going back down the other way. So that one would have worked right there, and here's the next one that would have worked. So what I do is, it's again another scalp. It's not looking for like a measured move down here to my target to the 141.6. Then first entry is once it hits the 200 level from the 1 minute box, we look to get in around, I look to get in around 38%, and then a quick scalp. We're about halfway down to where the 23.6 would be right there. You can't hang on to a little bit more, but the safest way is right there. Just get out of it. If price goes up, hits the 61.8 for it, get in there, and then have the exit down at that 38.2%. So that's just another trade setup right there. And then all you do is once that happens, and if it had gone down there and hit that target, you just continue to move the box with it and keep on taking that retracement trade, because you should be trading with the trend then. But if that doesn't happen, but if it reverses, which it did today, see it start down there and then start up top over here, well then what I do is, and this is something I'm looking at, I got to research it tomorrow. How I'm doing it right now is I just take the low of the day, which is right about there, and then we just follow it up. So what we're looking for, the same sort of setup, is we are looking for a retracement down here to the 38% line, and then we'll take it about halfway, which would have been right about there, where about the 23.6 is for it. I don't have it marked on here. For that one, if price comes down, if price continues to go down to hit the 61.8, we'd get in right there again as well. I'd get in there, and then the exit moves to the 30%, about where originally you got into it. But as you can see, once price broke above that the 1 minute candle zone today, that was it. It wasn't coming back for it at all. So even if I just draw this up here all the way, it doesn't matter. And that was that for that one. Another trade that I do as well, which I didn't get in just because by the time this hit, this was, well, actually I missed this one here. It hit at 11:54 a.m. So yeah, I missed that one. I was out to lunch. What I do is I fade it. That's the extension zone from yesterday's high and low right there. So there is yesterday's low. Here's yesterday's high. So I just measure it from the fib levels. It automatically does it again for my indicator suites. Thank you, AI, that created this for me. You don't have to pay people to do that anymore. It's so very nice. So what I look for is I fade it, meaning I would have gotten short right there. I'll go get, where is, I should have saved that circle up there. I would get in right there, just right up there. And then, okay, I'm still learning this. This is, let's see here. No, that's not what I want. That's not what I want. That's not what I want. There we go. Where is the circle? Okay, saved it. There we go. All right, cool. So right up there is where, I need to change that color a bit as well. So right there, I would have shorted right there. And then the exit, what I look for right there is I just use the last kind of colored low of it right there. It's again, I got these semaphores, got that coded on here as well. So the red ones are the highest colors. Those are the strongest pivot points. Orange are the second. I don't have the yellow ones on, which are the smallest colored semaphores, just because it makes it a lot more cluttered. So that's the last colored one that formed right there. So that's where the anchor would have gone for the Fibonacci low. Then we have it for the high. And then all we do from it is we keep on dragging it up if it kept on going higher, because the exit we have is the 38% level right there. Let's put this on right here. So currently this trade still is live right here. And that's going to be the exit down here at the 38% level right there. I'm hoping that we got about 20 minutes for the markets close for the day at 4 and then open up at 5. What I'm hoping for is, yeah, that's good. Yeah, please keep going up. I'd love to see it go up some more, hit about here again, then I'd short it, looking to take it down there as well. Obviously, if price continues to rise for it and this one goes past the entry, say I got past the original entry, you have to get in again, just average it down, so it would go back and hit. But for the most part, you don't have to do that. At most, it would go up and hit around somewhere at the top of the Fibonacci extension zone from the previous day up there, and then reverses back down to it. But there is occasional times it keeps on going up, you know. But for the most part, this does provide a good, at minimum, scalping trade. Like even right there, if I was in it, I would have gotten out. I mean, that's for that end of day right there. Don't want to hold it overnight for it, just because the AMP just keeps on raising the margins. I mean, they obviously do not want people holding contracts overnight. Used to be able to, but now they just keep on raising and raising and raising and raising the margins. I even took a screenshot of what like it was their margins 6 months ago compared to now, and they've raised all of them. I mean, it's insane how much they raised them. But anyways, so that would be a nice little profit right there. Let's see what that would have been. Kind of right there. So you take it around there. Yeah, I mean that's. With one micro contract, $41, 36 ticks for it, so not a problem. Then for this trade, this is probably the best trade of the day. I got in somewhere like right over here, took it up, yeah, about right over there-ish. So yeah, that was a nice one. Dow Jones had one as well. So those are the trades. Going into tomorrow, like I said, we have this trade set up right here. That is currently live for it, fading the extension zone from yesterday. We are in this deep channel right here. So even using this last kind of major pivot point for it, this is a good one to see when price comes down, hits at least a 38% level. Then what we will look for is going, where did the thing go? Going up and, goodness gracious. Okay, that's backwards. Going up and hitting the target zone right up here, you can see right there, and or I guess the bottom of it is what we would look for, 141.6. So if this trend channel holds, I don't trade off trend channels, but they do. I consider them like a picture frame to a painting. They just put everything in focus, so it looks a whole lot nicer and better, and you kind of get some framework of what you are looking for. So if this, if this is the true trend channel, then probably would look for something lower down here, closer to the bottom before price is going, if it does go up there and make the move, and then kind of the, oops, let's see here, dang it. Do that, and then if price does go down, which I mean eventually will, and break the trend channel, it doesn't mean that the uptrend is over, but what it can signal a lot of times is when that does happen is you can get a push higher to the target up there to hit that, but then you have to be looking for that the move is complete, and we would be looking for a trend. Okay, that's annoying. I think I need to hold it down. A trend down from somewhere like that. It doesn't happen all the time, but it is a warning signal that when price does come down and break the trend channel. And another thing that I do for it is when price does break the trend channel, I take it all the way back to the original pivot point area down there once it breaks the trend channel, and obviously that would make the target a little bit higher up here for it. And then after that, the potential looking for a retracement back down. Doesn't happen 100% time, but it is the one of the flags I look for when a kind of certified trend channel is over. So that's what I'm looking for going into tomorrow. Take care.